We'll do it live.
Okay.
We'll do it live. F it. Do it live. I'll write it and we'll do it live. F***ing thing sucks.
All right, welcome back, everyone. Hope you guys are having a great day as always. And if you're on holiday right now, hope you guys are enjoying your Memorial Day weekend as we come to a close and get back to work tomorrow. So as you guys come in, I put out the poll so you guys can answer that. It's a little, maybe touchy, you could say, but we've covered this topic by quite a bit. I called it paper on purpose. We'll get into that exactly. Now, if you're watching this on other platforms, whether it's Twitch or Twitter, you may or may not have seen some of my content regarding Chinese VIEs. And I wanted to wait until after maybe the sentiment actually improved and the shares were once again above like $120 a share or so. I've talked extensively about the issue regarding some of these entities. And while it was, it's always fun to kind of beat the dead horse, so to speak, as a metaphor. In this case, I prefer to be sort of talking about it maybe when everyone else might not be talking about it. So as we're kind of seeing Alibaba trade at, and I choose Alibaba on purpose because it's the one that I see retail talk about most. There's plenty of them that we could kind of throw at and really discuss. I'll be talking about Alibaba and JD.com because of the recent news that actually has come out about them. And I want to emphasize why you should not be surprised by this whatsoever. And it actually further proves the point as to what the thought process is behind these companies as they look at you, the Western investor who own nothing. So let's kind of see if there's any questions. You guys feel free to just ask them. And then we'll get through some of your questions as well. In the description, you'll see more or less the topics that we're going to be discussing. This is the public portion of the show. We're going to be doing a private portion. Andrew and I, we call that the ICOM for the club members after this. And they'll be pitching. I'll be pitching and doing portfolio updates there. So with that being said, let's get into it. So Alibaba here over the past 5 years has done about negative 45.56%. Recently has done a dividend, has also done some buybacks. My stance on this has been clear from the beginning that I do expect there to be token dividends, token buybacks, token return of capital to shareholders. Now, when you're looking at the net return to shareholders, it's still going to be, in my view, it's predictably going to be negative. And one piece of news that actually came about that I thought was really interesting, and I actually retweeted this on Twitter. We'll go ahead and I'll share my screen here. If you guys aren't following me on Twitter and you want to follow me on Twitter, feel free to follow me on Twitter. I do post some things that you might find interesting here and there, but we'll go ahead and share this tab now. So in the case of JD.com, we saw that they issued some convertible notes. Now, why is this interesting? Well, let me also go ahead and share this tab because we need to kind of talk about them side by side. And this one, we have Chanos tweeting this out. I retweeted this because I felt it's pertinent to the conversations we've been having and also to the conversations we're going to have today. This was my tweet. Yes, people need to understand. Might make a victory lap video. This, you could consider it somewhat as the beginning of a victory lap of sorts, but I guess just to broach the topic here, we're going to talk about this. We're going to use Seeking Alpha, decent source for what I'm going to be illustrating because I can put them both side by side quite easily. Hello from Greece. Hello from the United States. So one thing I will say is what you find interesting with both of these companies is, of course, the financials look fantastic. And I agree, right? Anyone can look at this, and these are pretty large businesses. So there's a lot of people following them. You're not some secret value investor who, just found the gem and everyone's missing it. No, I think everyone can see what it is. I think that for the most part, let me reiterate some of the points I addressed where and it has to be in being very particular with my words here. the Western markets have not yet valued them for what it actually is. Right now, I believe that the Chinese companies, they're trading based off of sentiment, pretty poor sentiment. There could be other things the market's concerned. But if the market truly valued them for what they were, they'd be closer to zero. That'd be probably where their fair value would be, because you don't actually own anything. Not every Chinese company is these weird structures. So I've talked extensively about the structure in the past. I have tons of videos on them if you guys want to. The reason why I don't make new ones is because nothing has changed. Those videos are still valid today. And I would just be basically repeating information to farm views, I guess. And funny enough, those are one of the lower viewed videos back in the day. So because the channel was much smaller, I guess relative to the size, they were pretty good. But you look here, you have a pretty good balance sheet. And again, I'm using Seeking Alpha because it makes it really easy for us to look at key items side by side too, so it fits the purpose well. So I have JD.com with $23.8 billion in cash, long-term debt $5.9 billion, presumably plenty of cash to do everything and return capital to shareholders. Not really a need to start issuing this convertible debt. And when you look at the cash flow position, it's also really good. So if I was looking at a business like this in every other situation that I could dream of, I would notice that there's probably going to be a heavy emphasis on returning cash to shareholders, especially if let's look at JD.com share price over the period of time. I mean, like it's like the cheapest it's ever been, right? If you look at it from price to earnings, price to free cash flow, it's the cheapest it's ever been. So buying back shares here, hand over fist, would probably make a lot of sense. Now, when we look at the results, we're not really seeing that. We're seeing sort of like this tokenization, this token buybacks relative to the financial position of these businesses. So it doesn't make much sense. So either they're very poor capital allocators in the sense of like not returning capital to shareholders when you're getting a cash flow yield that's pretty incredible, right? And what is the price to earnings here? I'm just going to take the TTM price to earnings, but we could look at the forward. I guess that's in no. Should be somewhere here. Here it is. Price to earnings 11.54 for a business that's growing pretty well, strong moats, etc., and 14.05. I'm looking at the forward, and then trailing 12 months 9.5, 9.44. So I guess the forward estimates here don't value that too much. I don't really value that from Seeking Alpha, but that's basically saying that they're probably going to be less profitable in the future. But let's take it at it remains flat. It's very cheap right now, under 10 for a business that has a huge barrier to entry in China, has done very well, growing very nicely. And like I would assume that we would expect to see some sort of massive return of capital to shareholders, not what we're kind of seeing. And then so this tweet that came out, I felt was really interesting. It really emphasized the point. And then I think that the what's written here, tell me again how Chinese tech giants are returning cash to foreign shareholders, Baba and JD. I think this is really illustrating the point here quite nicely. It's like, yes, it doesn't actually make sense. So it only makes sense if we get back to the conclusion that I've concluded, and I've stated that's my point on these, is that you're not actually an owner in anything. And so if you're not an owner in anything, I don't expect them to treat you like an owner in anything. And that's exactly like what we're seeing. We're seeing that you're not actually being treated that way. In fact, any movement towards returning capital should, in theory, if we should see it, it should be some sort of like token return of capital, and only to kind of coddle the Western investor so that they don't, realize exactly what the purpose of it is. Now, not all Chinese companies are structured this way, by the way. There's actually ways to invest in China and still have ownership structure. These are, so China's law, I'm not a Chinese law expert, but this is from what I know. Chinese law restricts foreigners from owning specific companies. The JD and Baba are both in that category. There are other companies that you're more than willing to own in China, and you actually, funny enough, you see the difference in how they return capital to shareholders. There's actually a very stark contrast in how one company, and I'll use an example being Yum China. So Yum China owns KFC. I don't think there's Taco Bell in China, but there might be. It's basically the Yum brands, but in China. So Yum China spun off from Yum Brands, and now you can invest directly in YumC. If you actually look at YumC's return of capital to shareholders policy, it's really extensive. They're basically returning all cash flows to shareholders as much as they can. in the form of stock buybacks and dividends. Very stark difference from how some of these restricted entities are treating you, because of course, you're not actually an owner. And this should not have been a surprise. Let me repeat some of the information I gave in the older videos. If you go back in time and you see what happened with Ant Financial and Yahoo and SoftBank, it wouldn't be a surprise to you. Of course, the journalists at the time, of course, they were surprised because they didn't understand exactly the nuance that was happening. Basically, you had Ant Financial that was stripped away from the main company, Alibaba, and they just had to deal with it. Now, in the West, we would look at that and say, okay, well, what happened there? You own this company, and it's the equivalent of Jeff Bezos coming in, is the analogy I gave in those videos. Jeff Bezos coming in and saying, AWS, well, that's just mine, and you can have the rest of Amazon, but I'm going to just take AWS. Now, of course, Yahoo and SoftBank did what they could. They sued. Now, they were probably going to lose that because every other time that these laws have been challenged in China, it has always been ruled in favor of what the law is, which is you don't own anything. So they had to do a settlement, which was basically paying pennies on the dollar for those assets. And of course, you had Yahoo and SoftBank who had to accept, because at the time, you needed to understand this. At the time, Yahoo in the United States, their entire balance sheet was Alibaba shares. So if they were to pursue this lawsuit and then lose, et cetera, they would basically be also simultaneously admitting that their entire balance sheet was worthless. That it was all a sham. Now, they couldn't do that, right? By doing better for their shareholders, right, their fiduciary responsibility, they had to accept and then kind of continue to play. Eventually, Yahoo spun off the Alibaba shares into a investment vehicle called Altaba. It doesn't exist anymore because they fully liquidated. So they did well by their shareholders, but it kind of kept the sham for a lot longer than otherwise should be. So again, I say right now, like, the West does not actually value these things as they should be, which is, basically close to zero. Why not zero? Because there's always the chance that the law changes. That's always a possibility. But as it stands right now, you don't actually own anything. Now, you could probably make an argument to do some sort of dividend discounted model on these, because now there is some token dividends that is being returned to shareholders. But, that's a kind of a weak argument, in my opinion. There's so many better businesses to invest out there. And again, there's entities that you could invest in China that don't actually have the structure. But I guess retail investors, for whatever reason, foam at the mouth with Alibaba, because they foam at the mouth every time some super investor buys into these stocks. It's kind of a fascinating thing to observe. And then some companies, and this is why I say it is not, the market has not come to that realization or conclusion yet. You still have companies like Pinduoduo, they're doing really well, but are also in that restricted category. So it's really just a sentiment thing. And that's why if I'm correct on that, every single time that you see, Xi Jinping come out and say something that coddles the Western investor, oh, it'll shoot up. Or you have some sort of like token announcement of a dividend, it'll shoot up. It's all just sentiment. In reality, the market itself hasn't priced in efficiently, in my opinion. That's just my opinion. It could be wrong. That you don't own anything. If it did, we'd probably see something close to like a nothing valuation on these things. So yeah, that's my quick take on Alibaba. I timed myself for about 20 minutes on this topic, and we also have Andrew that's come on. So you changed your name, didn't you?
What was my name before?
Well, Andrew. Or Gondar.
There.
Now we have super chat. Let me see. I saw Ingles wearing Crocs. Oh, okay.
Hey,
chat.
I was gonna say, one of the things I listened to everything you said. You didn't tell me though the cope reason why Baba must do this.
What is the cope reason? Sorry, I'm doing this thing on the side.
Because think about it. If you're invested in this, you have to think there's a logical reason. That's not I don't care about US, and that's liquidity for me, right?
Yes. What is the cope reason, actually? I haven't heard the bull's cope on this.
It's very hard to convert yuan to Hong Kong dollars to US dollars. So they need dollar denominated bonds.
Oh, so like not even a good reason, more of a reason to be bearish. Okay, so basically they need monopoly. They can't use monopoly money. They have to use real money, and it's hard to get real money.
Right. So
very smart.
That's what I was like reading, and that's what people were saying. They're like, "Oh, they need this," and I was like, because I think you went and broke down like if you're an American, the other thing I'd say is that if they actually cared about you, then these bonds wouldn't be convertible then.
Mhm.
You would issue non-convertible bonds to just show like it's not dilution. But if you looked at like the free cash flow yield or like price to earnings or anything on these companies, and these are American companies, be like, why are you issuing debt? Like you have like a stack of cash and you have
Yes.
tons
What?
of free cash flow. Why these guys? Just Alibaba has. I'm just pulling up. It looks like 50 billion net cash.
Yeah, no. I have it pulled up for the audience. They're seeing it too.
Okay.
It's not precise to the point, but it's accurate enough. So yeah, you have a strong net cash position in Baba. You have a strong net cash position in JD. There's no reason. And they're producing tons of free cash flow. Again, I'm assuming everything's correct. I'm assuming zero fraud. I'm assuming all the numbers are correct. You don't have to go that far before you X these things out. That's what my point is. By the way, Dom Stocks, yes, NEO is also in this category. It's also a restricted entity. Anything that you think of with like technology related in China is a restricted entity. You're not legally allowed to own it.
Yeah.
There are two loopholes.
What are the loopholes for tech?
So the loopholes are you can be a foreigner and own the shares if you're working for the company. I think you have to be on the mainland. So that is the part you might look up. You might have to be working in the mainland for the company, and it cannot be voting shares. And you are allowed to own the actual shares.
Okay. No. Okay. I get what you're talking about with those. Yeah, because I've read that there has to be a partner who's Chinese who runs the company. And like you said, it's non-voting. So it's very like, even then, do you really want like a non-voting share?
Oh, well, no. These other entities, like, for example, Yum China. No. You are actually, that's not a restricted entity. China has done this for businesses that they've deemed integral to their national security, basically. All tech, basically, car companies, all of that jazz. And so it gets down to, it is great or full theory at the end of the day. The laws could change, and that's why I don't think they're worth zero. You apply some sort of big discount factor, big discount factor, because like I would definitely, for something I can't even own, I would not be paying a 10 times multiple for that. That makes no sense.
There's another reason this is like a company I never invest in. I think I found a new addition to like a new indicator kind of alongside the GMM method that I'll reveal to you in private. But there's this one.
You can talk about an icon maybe.
Yeah, this one got hit with that.
Oh boy.
Yeah.
Oh man.
But it's the opposite way. Like when this happens, it goes down. So
when it happens, it goes down. Okay.
Yeah.
So like a little way to play some shorts. I like it.
But yeah. So anyways.
I wanted to talk a little bit about, this. Warren Buffett says here, Baba Bulls always point out BYD and Pinduoduo, Chinese can go up, bro. This is like my point about it is not like the market as a whole has not priced it in for what these entities are. This is all a sentiment thing. It's all a sentiment thing. And so that's why I'm going to shout out Dan, who I've talked about pursuing the sentiment trade, but Dan actually went out and did it. So he actually put his own money behind it. I know that Strongman did it as well. And they bought the Chinese index, right, as a way to play the sentiment trade without picking an individual name. At the end of the day, that's how I view the way to make money in China. And we've done it on video before, as in I made a video, expressed my long position, very tiny and fractional, expressed my long position for it was Tencent and Alibaba, and then we did like some switcheroo with Process as well. Or is actually first Process, then I think no, reverse that. It was Tencent, then Process. And then what we're basically doing that is expressing a trade, and that's what explicit was at the whole time, to capture the sentiment change, becoming from negative to positive. And that's all it was. So,
and this is very common. If you look, like there seems to be within the Chinese stock market a lot of wild swings either way.
Yes. Which you have. Oh, sorry. Continue.
I love the thematic ETFs. There's yin and yang. One's bullish and one's bearish. And so I think they're both levered too.
That's a good name.
See, yeah, the yin is 3x China bull, and I think yang is 3x China bear. Yeah, yang is 3x China bear.
Yeah. And I see there was an interesting comment here. Yeah, it's crazy that these stocks are listed on the NYSE. Yes, this is something that U.S. regulators have kind of known about a little bit, but have turned a blind eye to it. It would be quite hostile for us to just deny China free capital. But it's something we could pull at any point, if I'm being honest.
We don't want to be hostile to free capital. We'd rather like not let them get NVIDIA semiconductor chips. And
Yeah,
like,
do that instead.
Let's do that instead.
Yeah, we'll do other things. We'll play around, but that's something that we could pull at some point. And everyone who says like, "Oh, we don't care because it gets Hong Kong," if you get the Hong Kong shares, you're not actually skipping around it. You're still participating in it. It's very tiny.
It's tiny, but also, and I don't think they own tech companies, so they could potentially actually own the companies, but it's a very small part of what they do. They're primarily, when it comes to Asia, looking at Japan.
Well, I'll say this: large banking institutions, Western banking institutions, in some cases, it's a case-by-case basis. They actually, in some instances, can get access to the A shares. Call it what you must or whatever you want, but it could be, corruption within the CCP that they allow it to occur. And so if you're a big institution, big banking institution, they can get access to it for some of their clients. But that's a case-by-case basis. I'm saying when you as a retail investor are buying these two stocks, that's what you're getting. All right. That's what I'm getting at. Not going into but actually there was that one instance and I'm like, okay. Yes. They exist. There are exceptions to the rule. And like I said, there's plenty of companies you can find that do not fit that category. I mean, Andrew's been going deep diving into some of these because there are plenty of very crappy organizations of businesses just within the United States. Like we don't even have to go to China. We can go, to the United States. One that we're going to be talking about on ICOM today.
Yeah.
That we're short.
We are indeed.
It's going to say that we're short. We're officially short. Why does because Michael Burry's he's trading. That's all he's doing. That's what people don't understand. He is trading the sentiment. That's all.
What is Michael Burry's turnover ratio? I think it's really high.
Insane. It's insane. He's been in and out of these stocks. I don't know if have you been investing for like 3 or 4 years? He's been in and out of Chinese stocks. This is like the third time I think that he's been in Chinese stocks.
His average time holding the top 20 of his portfolio is 0.8125 quarters.
There we go.
All
right.
His turnover ratio on a monthly basis, it looks like, is 63%.
Let me actually close the poll now, and then we're going to get on to the Becky trade.
Oh, quarter. Okay.
All right. So, and poll, most people, 80% of the capital mindset audience does not own Chinese paper. So congratulations, everyone. You do not own Chinese paper. I'm proud of you. Okay. So moving on to the Becky trade. All right. So the Becky trade, let's talk about the Becky trade. We have a couple. So how much time did I dedicate to this segment? We have 10 minutes. That's plenty because I want to get to the On shoes because I bought 2 pairs and I'm like raving about them. I think they're great. And I want to know Andrew's. I want to give the floor to you, Andrew, because you talked about Ons a lot off cameras.
Yeah, times. And I'm invested in On.
So I think we'll start with like Starbucks. So Starbucks is interesting just because it passed the triple cross, which is like 3 clowns that together, when you get their opinions together, it basically captures the bottom of any stock. I won't say exactly there.
Did we add it to be a quadruple cross?
It is a quadruple cross. That is correct,
so
because I added a new measure. So 4 clowns. There's 4 clowns. You grab the 4 clowns together. You put them in a room. They all say a certain thing in a specific way. It has historically in at least 3 for sure that I've invested in has helped me time the exact bottom of the stocks. It will eventually not work, but for the time being, it's hilariously working. And so we're just keeping going.
So I need to monetize this because we like kind of came up with this together, and you have minted off of this, and I have made nothing.
Yes. Oh, sorry. There are 4 stocks. No, you're right. There are 4 stocks. People are shouting out a lot of the stocks. Yeah, Lakers and 4 shouting out. There are 4 stocks. I forgot about that one. So sometimes you get like not the full picture because only like one of the clowns talks about it and then shares their opinion. It has to be a specific opinion, by the way. Like it's a full-on methodology, and it has worked for me at least. It's been very material, except for Starbucks. Starbucks is a very immaterial play for me. Oh, for full disclosure, I haven't done a public portfolio update. I know that the club members all know what my investments are, but publicly, it's I own Starbucks there. I said it, but it's a small allocation. I sort of bought it because it passed the signal, so to speak, and it's working so far.
Do you just buy calls? Because I think the average return after you hit this thing is like 100% in the next year. So we just like buy calls. Like,
maybe we buy some calls and capture the edge that we have by using the signal. So yeah, no. So that's full disclosure. It could be that this one is the one that ends up not working because it is a joke at the end of the day. But there were other reasons to go really long those other positions that also somehow, coincidentally tracked with this methodology of using the 4 clowns. So I think with Starbucks, I have my price point that when I've done my evaluation that I would really build this position up. But, I kind of just said, well, it passed this kind of joke, but also not joke, still mostly a joke, signal. So I'm going to buy shares and it's working. Hilariously, it's working. We'll see how much money the trade makes.
I mean, okay. And it's funny, going back to Starbucks, one of the first times, I don't even think you knew me. It's like when I found you on YouTube, you were going through like, it was a public stream and you were talking about different stocks. And one of the ones was like Starbucks. And someone's like, what do you think about Starbucks? And you said at the time, and I think I made a comment, I was like, this is a stupid investment right now because the whole growth thesis is China. And this is like probably 2021, 2022, somewhere around there. And obviously like that's given time to flesh up because at the valuation, then it was just like, didn't make sense. Yep. I'd have to understand. It sounds like they're trying to recapture share now within the US.
Yep.
And we'll see how that goes. But
yes. And I dislike any business that has a reliancy on the growth coming from China. I'm going to say that right now. I don't view that as very valuable. I want to know. And by the way, China exposure to Starbucks, if that goes away from the narrative, I'd be actually really happy for the business. And China's not that big, but it is a growth driver for the business. So I won't say who it is, QC Panic, because I really would not want the 4 Stooges to like correct or anything, because it actually has been a monetary help. So like, just in case it is some sort of edge that exists, I don't want the signals to change. I don't want them to correct. I don't want them to learn. And if people want to follow those other signals, it's okay. That's their prerogative. That's their right to do so. But I don't want, to by chance like mess with that. So the other part of the Becky trade, and I guess I'll reveal this publicly because for the most part it's played out. Right? You know which one I'm about to reveal? I haven't done a public portfolio update because I've just been so busy to do public content, which this week alone, there's going to be a lot of public content because I have like 3 interviews back to back. I think one of them I'll be releasing next week, but or at least 2 weeks, but there's at least 2 that are going to be live public this week. One of them's with a CEO. The other one's with another YouTuber. And then the other one is going to be more of like a private pitch that then I'll release elsewhere publicly. But
I don't know who the other.
Come on, it was huge. It was huge last week. Leo and I were really excited about it.
Oh, is this the one that I originally talked about? And I'm like, I'm not touching this though.
Yes.
Yeah. Okay.
Wait. Maybe. I don't.
Is it on? Yeah. It's a stock on. That another YouTuber has.
Not on. It's not on.
It's not on. No, I know.
It's beauty related.
Yeah, it's Elf. Yeah.
Okay. Yeah.
I was the one who's been talking about Elf for a while. I just don't touch beauty, and so I was like, I think Elf looks really attractive here. It can grow for a long time, but like, I think I've invested in beauty like 2 or 3 times, and every single time I have done it, I have gotten obliterated. So I'm like, you know what? it's obviously out of my realm. I know I'm beautiful, but I just don't.
Once again, Gondar, you're 10.
I'm a 10.
Kofu hat. So, yes, the Becky trade. It's basically happened. This was a pitch. I think it was not last week, but the week before I went on vacation. We pitched it to club members, and I went long in a couple ways. So I went long commons, and I also went long directionally using put options. So in addition to that, what I did by going directionally long with put options, I sold put option contracts, taking advantage of that higher implied volatility on earnings, and I got some good premium. But anyways, and so I'm talking about this now publicly. It's already played out, but we'll talk about it, like why it worked, what happened, what's good about the business, what went well, what went poorly. So the thought process across this trade, and it probably still has more legs. Like we could still see it continue to rally. I actually bought even more shares the day after, and both in the holding company and in the personal holdings. So I'm exposed in both ways, and it's not a tiny position. It's not one of the largest positions. It's kind of like a medium-sized position is what I categorize it in terms of size. Now, the idea behind this, when we originally pitched it in the club, was talking about the movement, the shift in spending on consumers, more so from a, let's call it luxury or premiumization, to now more of a value oriented. And this is kind of taking off the backs of what a lot of other not clients, but a lot of other businesses have been talking about regarding consumer behavior. And so what essentially we did during the pitch is saying they're reporting soon. Likely they're going to report or talk about taking more market share than people might expect. It might be a little bit of a surprise. And we'll see if they're taking more market share from the premium brands. That should reflect in their guidance. Now, the other part that was interesting was you have another Becky trade, and then we were going back and forth not off camera, but behind the scenes in the club between Ulta Beauty and Elf. At the very last minute, pretty much, I think 2 days before, because I was already on vacation, the conclusion was decided, right, that we're going to sell the entirety of Ulta and go, no, one thing, Elf. No pair trade, just Elf. And that ended up working out very nicely.
Oh, so my token buy of Ulta to crash the stock for you guys is I can sell that now?
Yes, you can sell that now.
Yeah. So
well, not to crash Ulta. Ulta hasn't crashed. Ulta is still in a. I think Ulta is a decent value, especially if you think they're going to return capital to shareholders.
Well, because I had told club members that, or some of them asked me, they said, "Can you buy Ulta so it will crash so we can get a better entry?" And so I did a very token buy of it.
Well, I don't think Ulta will crash because one of the indicators from the other method basically set the bottom for us.
Yeah, but one indicator I don't think is enough.
It's not. I know it's not 100%. It's not. It's not a never miss indicator, but it's something to consider. Again, for the audience members, I'm joking with that indicator, but like also, I do at this point take it somewhat seriously because the guy's actually that moronic that he's a very good contra indicator. So as a contra indicator, he's doing his job.
And let me just say, QC, if you really want to know, I would advise joining the club. I'm going to shill us because you're actually not very close.
Oh yeah, you're very far off.
Yeah.
Yeah. But also, if you find out the methodology, you better not, talk about it too much because we do not want those individuals to correct themselves. If they correct themselves, the methodology is broken, and it is only so long before we find out. But again, it's a joke, but it's also not. So Ulta Beauty is reporting earnings soon, and it's going to be interesting to see what they have to say. There's a lot of things that are going, let's call it, in the wrong direction. I think with Elf, you get that trade, the Becky trade, kind of going to value. And then you have a lot of expansion opportunities, both in Europe, Latin America. They're expanding in Mexico through their partnerships. And it seems like the limiting factor for the business has been how many partnerships can they get? And everyone wants to be their partner. So that's a good problem to have. Now, I think for myself, I built out the position. So like I'm already done. And it's been like a very quick winner. Normally, we don't get oftentimes where this happens with equity. Like this year, we've done really well with infrastructure where they've been almost like instant winners. infrastructure, DC infrastructure. That's been really strong movers this year. And then this one, you can now count them along the list. It's separate. I don't know if you want to count British American Tobacco, because that one we also kind of got lucky on like a temporary bottom, because we'll see what happens. But it could be like a temporary bottom for now. So.
No,
all right.
I think we've had pretty good track. I mean, to be fair, the market's up like 12% year to date. So like, it's hard to like not hit on a long position. But very outsized hits still.
Yes, I think for the year-to-date performance, I'm approaching as of Friday. I'm approaching the last Friday. I was like, what day are we on? We're on Monday. I'm approaching in the holding co. Let me see. I'm approaching 30%.
I don't think I'm quite that high. You always make my returns look like shit. You just gotta stop performing well.
I will have something that's gonna hurt hard, like something big's gonna hurt hard, because I'm a bit more diversified in the holding co than I'm in personal holdings.
Yeah,
but even though personal holdings has done actually better than the holding co this year, but last year was the opposite. Last year, the holding co for the club did actually way better than the personal holdings. So
this isn't updated for yesterday, but I'm gonna average because I have to like weigh it between different accounts I have. It looks like we'll go like 21%, roughly.
Okay, yeah, that's pretty good. So that's very good. That's pretty good. That's very good. That's still over
30 though.
No, I'm not 30 yet. I'm approaching 30. I'm approaching 30. I'm going to be publishing, because at the very end of every month, Merrill does the full CAGR calculation, because it doesn't. So like when you do the annualized rate of return, it doesn't calculate until the end of every month. So right now I only have the end of last month in there. I have the year to date figures, but I don't have like the annualized that has like the nice little chart and shows like every year annualized, et cetera. And then the CAGR return rate, because the CAGR return rate is right now at 28 point. It should be higher now, because we're doing pretty good from like we're not even halfway through the year.
Right.
Let me actually get the I can just scroll down. Here it is, annualized. I have to do max period. Max 28.34 for the entire period. And then the year-to-date portion isn't updated, because it's only updated up until April 30th, 2024. So it's from the beginning all the way up until April 30th. And then at the end of the month, which is like right now, so in just like a couple days, this gets updated. And then that's what gets updated in the club performance.
Yeah. The nice thing is I haven't had a red month this year, because the only red month was April, right? In April is when I had a big short hit, I think. So. Oh,
yes. Yep. Yeah. Well, no, that we already talked about it publicly. Like Dan and I have talked about it, but we can talk about it. That was one that I see, Gil, you're in the chat. That upset you a lot when we talked about the short that we had. But yeah, that was. I'm actually releasing that video, the pitch. When we pitched it to the club, I'm gonna cut that out.
Yes.
And send it out to the public audience so they can see it. Of course, it's like after the fact, because when we shorted it, it was over $20 a share, and then it crashed like over 40% in a single day. So, yeah. Let's see. We are good on time. All right. Let's talk about where we're a little bit late to this one, but let's talk about On Shoes.
Okay.
So,
and I still think them and Hoka's owned by Deckers, by the way. Did you see Deckers' report?
Yes.
They crushed it. Oh my gosh, Deckers. But, and Deckers is a bigger company. They have a lot more things other than Hoka. I don't know what else they own. Man, On's getting a little expensive is the only thing right now. When I bought it, it was a little bit cheaper.
Let me put up On.
But the simple thing is, this is going to sound like for you want to do on stock.
Oh, On Semiconductor.
Oh. So for I don't know how long, probably like 30 years, it's been Under Armour, Adidas, and then obviously Nike, who runs the tennis shoes or runners or whatever you want to call them. And honestly, none of them I would say are like really high quality. Like you look at Nike, and Nike makes really expensive shoes. Some of them are really nice, but Nike's more, I always want to say, like artistic. Like if you look at like the stuff that makes Nike, the ones that sneakerheads like,
Mhm.
they're expensive, but they're more for the rarity. They're almost like a collectible. And then you look at like Adidas and Under Armour. I'm trying to think if there's another brand, but those are the main ones I think of. And they're just kind of like, they're tennis shoes, they're whatever. They're 50, 60 bucks. They're okay. Ons have come in, and Hoka's have too. And I'll be honest with you, I don't get Hoka's. Like, I think Ons are, from what everyone has told me, they're really comfortable and they look good. Go ahead.
So I bought 2 pairs
Yeah.
already. When I wore, I forget the name of the model. I'm so sorry,
Cloud?
but yes, I think it's the Cloud one.
Yeah.
Wow. Like okay. So one thing that's fun fact about me that everyone should know here in the audience, and I think Andrew might know, I don't cheap out on a lot of things, but I have in my life cheaped out a lot on shoes. I don't get sneakerhead culture. I'd rather
Me either.
spend money on something else. And I've always been like really cheap on shoes, like extraordinarily cheap on shoes, except it's like dress shoes. Then I spend more money on that, or like nice shoes. Like I'll buy like for work, casual everyday Cole Haans, stuff like that. But I'm saying like sneakers, if I'm going to destroy them and go to the gym in them, like I don't care, like cheap shoes. So I was not, I mean, when I bought these shoes and I put them on, I was already going from like, you got to understand, I was going from like guy who wears shoes for, this is, whatever, I'll say it, 7 years in a row. And then they're destroyed from all the running I've done and etc. to wearing, these. And I was like, whoa, I don't know if, Nike compares, but like I was, as to quote Fuhat, I was shocked.
I've worn Nikes and I actually never was like, I've never noticed the difference between Nike and Adidas and Under Armour. They all feel the same to me.
That's what I wore before. I would wear like a Nike shoe for like 7+ years.
Right.
Like it's stupid.
And so one of the things I also thought was interesting.
No, those aren't fake. No, Moxie. I'll spend on that, but like I won't spend on like sneakers. I don't get sneaker culture. Sorry, continue.
I don't know what those are. You spent that much money on it? Wow. I if you think Fabio is cheap, I'm extremely cheap. But I was gonna say one of the things, like for example, and I think we've talked about this, but so we're expecting a child in November. One of the things I told my wife was, because one of the things that gets more difficult as you put on like the weight during the pregnancy is walking and your feet get hurt. And so she's like, "Oh, I'm buying Ons." Like, so because they feel nicer. Like it's better shock absorption. They feel a lot better. I think and can you pull up just like the website so that people know? Because people might not be like picking up, like as soon as they see it, they're gonna go, "Oh, those shoes." Like, because I feel like they're easy to recognize. I'm not seeing it on the screen yet if you clicked on it. But
No, I'm doing this.
yeah, the ones, yeah, it's like the Ons.
Let me see if I see the ones I bought. I bought 2. It's not these. These are too thick and ugly.
Yeah.
I bought, oh, this is one of them.
Yeah. I think that's the one that she's getting.
These are good. Like I wore them to the gym just for a lifting session, but the ones that are great for walking are the Cloud ones. Oh my God. Whew, those are good. They feel, I was like, all right, bye. Oh, what is this? Bad UI.
So as you're doing this, I'm going to say this is where, so On started as like a running brand. Like they are designed for running. So the problem is you'd run in Nikes, you run these other shoes.
Terrible. They've
gotten away from that being their design. And the original Ons at least were designed, like On running, like even says it right there in the Cloud Monster. I think they started as trail running, I believe. Someone can correct me on that if I'm wrong. So one of the things that's going to be really interesting, and I think they can do this, is to see how they break into athleisure. If this company breaks into athleisure, it's going to like, I still think there's so much room to run here. Because yeah, shoes are great, but like the second you break into the shirts, the shorts, the yoga pants, sweatpants, all that, you open up a whole nother avenue of growth and reinvestment runway that I think, and I think these guys can break into that. I think that the shoes are well liked enough, and I think like the kind of running culture that's the kind of people that wear it that like to run and stuff like that. I feel like they're also the people that would buy, like you go to a 5K run and you know they're selling On shirts there, they buy them. Maybe I'm wrong with that. I will say like the On isn't as cool as a Nike swoosh, so that might be a problem. Like, but
I mean, I never cared for Nike. I thought Nike was just kind of an overrated brand.
but I mean, they're successful for some reason.
People, because other people, I wouldn't use myself as a
Right.
measure of what the average
Mhm.
person thinks.
For sure. I mean, dude, what markets are, because if is On not, because you know one of Nike's biggest markets is China, who's struggling. So I think that's one of the reasons that Nike's struggling. I don't know if On's broken into there.
Nope.
Oh, dude, if they break into there, that's gonna be
Everyone
really
just
bad. I mean, I'd be scared. I would be scared as a Nike shareholder to see what happens with that. But anyways, I've had On. It's a small position only because I haven't been able to, like I haven't had a lot of money to put because I've had other ideas. But when I had some capital open up, I put it into On fairly recently. I think it was around like 30 a share, maybe a little like 32 a share. And I just think like it's a growth company. It's kind of pricey at the current. I mean, you're looking at a forward PE of like 45, which is a little pricey. You know, for a shoe company that's going to be growing mid 20s, you're hoping for some margin expansion there. But they still have so many markets they can go, you know, grow into. And let me just double check because I think, I mean, they're still small relatively. Like
12 billion, 12.8 billion.
I'm saying sales wise, I mean, they're at less than 2 billion in sales. You know, what's Under Armour at as an example? And obviously Under Armour's on like, that would be maybe a good pair trade. It's like long on short Under Armour. Under Armour's at 6 billion in sales. Of course, Under Armour's a $2.8 billion company. So the only thing that's worrisome here is potentially the valuation. But like the actual, I get the trend behind it. And if anything, I would be very scared what I'll call like, you know how we had like Tesla and we have OEMs? It's like you have On and Hoka's and you have traditional shoe manufacturers. And those traditional shoe guys better figure out like how to get back into this market quickly because they are bleeding share is what we're seeing. I mean, don't get me wrong. Nike's still the 500-pound gorilla. They still have over 50 billion in sales.
Can I tell you an anecdotal? I went into a store yesterday, and it's a nice area. So, there was a shoe store selling sports athletic wear and clothing, etc. But the shoes on the walls, one entire wall on the men's section and the men's section and women's section, and it wasn't really that big of a store. The entire wall was half Ons, half Okas.
Damn.
And
was it a running store primarily?
Yes.
Or?
It was athletic. It was athletic.
Yeah. Okay.
And
go ahead. Sorry.
No. You go.
I was saying Nike's gotten away from focusing on athletic. Yeah, they have basketball shoes. Yeah, it's not an athletic brand. It's like an athleisure brand.
Why the fuck would I wear that? There's nice shoes that are not Nike. Nike is not a nice shoe.
The only reason is because it's cheaper. The only problem I have with Ons is that they're more expensive.
Oh.
As a potential buyer, or like as looking at like what's the, because if you're in a nicer area, maybe people can afford to pay $180 for shoes. A lot of people are going to go though and pay the $50-$60 that you can get for cheap.
Are Nikes 50, 60?
I don't know what Nikes are. I've actually specifically don't wear Nike shoes. The design of their shoe annoys my Achilles. You got to remember, I was like a soccer player, so I have like these weird preferences with shoes. Even I never wore their cleats either. I want to say they're closer to like $100 maybe. Let's see. I'm just going on their website. Dude, these are ugly. The heck? These Nike P6000s? What is this shoe? Okay, hold on. Let me share my screen. We're going to do entire screen. We're going to do this. Bro, what is this? It like folds.
It's bending, I guess.
It folds down into that, but like why? But like these are ugly. $110.
Lakers said they have the best basketball shoes. Where does it go down?
Nike does? Yeah. I would say Nike has the best basketball
Air
shoes.
Jordans.
Yeah.
We're just going to milk that forever. Air Jordans.
But they're bleeding, and I mean bleeding the runners. And that's a big market. Like this looks like a runner shoe maybe. But like they've gone from, because what Nike has focused on for the past 20 years, and someone correct me if I'm wrong on this, but this is what I've noticed, is like creative artistic design over performance.
Mm-hmm. Just look nice.
Look at this. You're not going to run in that. Like that's just a shoe you wear around. This looks like a runner, $210. So I guess the runners are priced more expensive than On. So like, and honestly, it's pretty ugly. But like you see, it's like different kind of like artistic designs, which is fine. $60. So these are probably the ones that I might see if I go to like a Payless or something where I get a cheap shoe.
We got 2 questions I saw in a row about, not in a row, but separately. I saw your question. Someone else also asked about Lulu. By the way, I'm seeing your requests, guys. We won't maybe get to all of them because some of you are, because we do have the private live stream to get to, but we can delve a little bit into Lululemon right here. So I'll come out and say, for full disclosure, that I have a directionally long position, not calls, via options. So basically, I sold puts on Lulu. I won't say the strike here, but what I think about Lulu. So I'm just saying that to get that out of the way, what my current positioning is. For Lululemon, I don't think that, well, the current valuation, I think right now it's trading at one of the cheapest you've ever seen it. I think it's trading at like a 18 forward multiple, something like that. I'm just going off memory there, but let me just check real quick because might as well. So Lulu, I think, is at a forward multiple of 18. No, 21. Okay, so if that's correct, it's at 21. And let me go ahead and share my screen again, and we'll do Lulu. But you've also had like the China story kind of dampen a little bit. Historically, it was trading at pretty lofty valuations, and it's had many times in its history where it's kind of corrected and people have come out dogged on it, and the company's shown again and again and again that they are still growing, still taking share. There's potentially still a lot of share to take. There's new entrants coming into the market. You have Aloe, etc. But for what I know, anecdotally, the quality is not as good as Lulu. I buy a decent amount of Lululemon clothes because it gives you that perfect mix of like, you can go to the office and then you can go straight to the gym if you so wish. It gives you that flexibility. You know, it's good for golfing. It's good. And they have, you know, general like direct athletic wear. They have good clothes that, you know, you can wear just around the house and relax in. Yeah, it's more expensive, but like it will last you a long time. It's good quality, good feeling, and all that. And then plus, you know, you do get good sales on the We Made Too Much on the app if you're, you know, looking to save a buck buying them. But do I want to own shares right now? I think there's other things I'm trying to allocate capital to, but I see why some of the club members have bought shares recently and are looking to buy more. Like I see the appeal. It is a good business, great management team. And then sort of like the counterpoints, because I've listened to the debating voices within the club talking about how, you know, well, it is an apparel business, so maybe it should be trading at a lower multiple. The forward growth might not be as high. So some of those are like the counterpoints that I've heard within the club to the Bulls. Overall, I am not going to deny that it's a solid quality business. The strikes that I have are reflecting sort of like the price point that I've determined as like a part where I'd want to buy it. But I'm still like fully invested. So I'm just gonna, if I don't get exercise on them, that's fine. It's not part of like my main core ideas that I'm focusing on. So it'd be a side quest, if anything.
So you don't have any Lulu, right?
No Lulu Commons. No.
I don't either. I'm kind of, this is a little bit outside my zone, or the problem is that people can, women especially, change their mind on like the hot, it's a joke I make. Kyle's more loyal than Becky.
Kyle's more loyal than Becky.
So like Kyle will be loyal, but like Becky can be trendy.
Becky can be trendy. It rhymes. I love it. He's rhyming over here.
Yeah. So, I don't know. Like, part of me thinks Lulu will rebound off this, but like, I don't know, because like someone was saying, oh, there's these other brands, yada yada. Like, I don't know. It's a little outside of my circle of competence once again. I don't know if they've done some big like problems, or it's just kind of like price creep over time, or why people are moving away from them.
I don't think people are moving away from them. I don't think that's the thing. I go to anecdotally, I went and stopped by Lulu yesterday. Mm-hmm. There was a line. There was a line in that thing.
So why do you think it's because they've missed earnings a couple of times, right?
Yes, I mean, like, of course, that there's only so much growth. Like we're talking about growth, like as in more spend. So they could be still growing, but just not as much growth as before. Because I've always seen, you know, every Lulu store that I've seen is like very busy, and so I mean, where do the people are going to spawn from?
Yeah, but like
to cover every inch of the store.
They're cheap. I mean, like if these sell side analyst metrics are right, like 13 times EV EBITDA or 21 times price to earnings, 26 times market cap free cash flow off sell side estimating double digit top line growth with, I'm assuming, some like slightly expanding margins. Mm-hmm. And let's see, what does their balance sheet look like? Do they have like room for buybacks if they wanted to?
Oh yeah, Lulu. Yes.
Mm-hmm. Do they do buybacks?
I think they've started to do buybacks. Yes. And let me check. Yes, they've been doing buybacks. Oh yeah, they've been doing buybacks. So like past 5 years, they deleted 3.66% of the share count. They're increasing the aggression recently. So past 3 years alone was about 2.89%. In the past 1 year, they've already done 0.44% in 1 year. So yeah, they've been quite aggressive. Over the past 10 years, it's been about a deletion of 12.9% of the shares. So no, they're in a good position.
Part of me just wonders why they're selling. Like, it seems drastic. Like, I don't know.
It's been drastic in the past. That's the thing. I've never held a long position in Lululemon, but I have at least been aware of their existence, following them along here and there, and I've seen it happen multiple times where there's just a very dramatic sell-off. And then you hear the narrative comes in and it's like, oh, LULU grow competitors, blah, 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 blah. And then always, every time it seems, it could be this time is different, but I don't know. I'm a customer. Actually, this right now, what I'm wearing, this shirt is a Lululemon shirt. Fun fact.
Oh, really?
Yeah, it's a Lululemon shirt. It's a Lululemon polo. I could go work out in this. I could do an office meeting in this. It's very comfortable. I have a bunch of these that are just like different colors. So repping the brand, actually. Does it even have the logo? No, I think the logo's here down here at the bottom. Yeah, so I like it more subtle. There's some shirts they have that have like the Lululemon logo right there. This one has like a little tiny logo down at the bottom left side of the shirt. Give us a little twirl, Fabio. No. What is this comment?
It's drunk, right?
I think so.
What's with the fruit basket?
Oh, he's always been the fruit basket. Well, I guess he is a fruit basket. Like, that's the analogy. He's a little fruitcake, little fruit basket.
Oh,
you know. So yeah, that covers Lululemon. I think the next topic that we have is we're a little late to this one, but real estate. And then after real estate, we have another topic, and then we can go through some of the questions of stocks people requested. But the heavily shorted cos, I think, is the one you're going to be interested in. We're not going to spend too much time on real estate. Do not worry, fret not. And, well, actually, no, you're an investor now. Can I say that?
yeah, you can say that. I am an investor.
So, real estate.
Now, when you say I'm an investor, are you referring to single family rentals, or are you referring to equities?
Both, but
okay.
I was going to ignore the single family rentals if you want to say, but
okay.
Real estate equities, right? REITs.
Yeah.
So there's been the accumulation period has lasted quite a bit of time, and right now, because I've kind of filled out a lot of the main core ideas, I have some, I guess, extra emphasis I'm going to be putting on buying a little bit more, kind of rounding out some of these REITs. And it's going to be buying pretty much the same old. I'm going to be buying actually more KRC here in the near term. There's actually another REIT that I'm going to rebuy. I'm going to talk about that today in today's ICOM, so I don't want to discuss it right now, but it's one that you liked. I'll just say that. So just to give you a hint, so we're ready to discuss.
I know it is then.
Yes. And it's been doing exactly what I thought, which was I sold it. So I had it, sold it, said, because I think we're going to have more time. And so I'd rather allocate this capital elsewhere. So far that's planned out. And then now I kind of want to revisit that idea and then start reaccumulating, because I have an inkling feeling that we're getting much closer towards the end of this. And with KRC, I didn't want to trade in out of it because, again, there's a lot of discounts being applied to that stock. There's also some industrials. I basically formulated an entire list. I have that here in front of me on paper, but I also put into an Excel sheet, like that brainstorming exercise that I like to do every so often. Yeah. And so I put together basically the list of real estate that I want to acquire, and why is what maybe we'll be discussing. But yeah, I think that,
I'm in KRC. I was in some communities and jumped out of that. And there's one other one I'm looking at that's like back to almost October 2023 lows, I think, which was the lowest ever for that company. Like in the recent, and having a hard time figuring out why it's down so low. But my thought, just to give a real quick, is I think you had talked before, like back in 2020, was it kind of early 2023, maybe middle 2023, so there'll be an accumulation period. And I think we're getting towards the end of that accumulation period. Yeah. I think I'm seeing signs, especially stuff like KRC we talked about. That seems that area of the country is starting to re-expand and return to offices growing and everything.
Yep. And that's, I'm trying to come in and take a little bit more advantage of this recent down spell in REITs. And I've been kind of doing that every time that we've seen it with REITs. Every time there's a little bit of a down spell, I add to the positions. I don't reinvest the dividends blindly, but I've been taking the dividends and kind of just waiting. So KRC is going through another little down spell. It's not as big as the one we recently saw last year, but it's coming down a little bit, all REITs. And then I want to take advantage and buy up some of the other REITs that I've been having on my list. There was the pitch on some of the industrial REITs that we really liked. It wasn't my pitch, but I did like it. And those are now, one of them is basically back down because remember, he pitched it, Leo pitched it, and we saw a massive rally. Not massive, let me correct. A decent rally in that particular REIT. And it's basically retraced all the way back down. I don't think he still owns it, but it's basically back down to the price point at which he originally pitched it, or just above it. And I liked the thesis, and I think it has those some similar discounts to KRC. But in general, like the theme here is I want to buy some more real estate. And I think that our window is maybe closer to the end than not. And it's another little down spell. Even if it's not, I'm happy with it because every down spell that we've seen with REITs, I've been buying them up. Again, as a percentage of my portfolio, it's not crazy, but it's meaningful and it adds a little bit of diversification to my holdings. So I'm more than willing. So, Fuhat, you're going to find out soon because we're going to have ICOM here after we close off. And then you're going to know exactly which ones.
Can I, before we, because we're just going to do really quick, was that the real estate? Or
that was the real estate. I just wanted to express to everyone because I publicly said, and I want to, say that I'm still believing that. And I still think it's been the accumulation zone for REITs. But
I just, really quickly, before we go, this is going to be quick. I just thought there's this interesting special situation that you can participate in if you want to.
Yes.
I think I've told you about this, but you keep on asking me, explain this to me. And I don't know if I've explained it to you yet.
Oh, yes. The monster.
Yeah.
Do you want to talk about that here?
Yeah. I think it's fine to talk about. It's not like it's super, ooh. It's Monster Beverage right now is trading at $52.70 a share.
Mm-hmm.
They are currently doing a Dutch tender to buy up to $3 billion of stock. It's, I think, ends on June 5th. Let me just see.
Oh, so you have a small window.
Yeah, right, small window. And the minimum price that they'll buy it for is 53 a share, and the max is 60 a share. So you have literally, if you buy stock, and I think that I was looking, someone had told me that they prioritize odd lots. If you buy the stock and then tender it, there's literally no risk because they're going to buy it for at least 53. I guess the only risk is that you don't get filled, but if they're prioritizing odd lots, then you should get filled. So if you buy it at $52.70, tender it immediately, you should have no risk and then potential upside. I think it'll be closer to 53 a share because a lot of this is insiders are going to sell their stock this way. So it's a way to give them liquidity without crashing the stock, which I think is the founder is retiring. And so this is the way to give him liquidity to get $1 billion of cash. And so, I think it'll be closer to 53 a share, but I think it's interesting as a special situation. If you want to if you're really risk averse, and like I said, it's not far away. It's June 5th. And
on an annualized basis, that's really good.
Yeah.
So what I'll probably do is, I'll ask you, come probably tomorrow, because I'm going to be restructuring. That's going to be one of the topics for ICOM. I'm restructuring the holding co.
Mm-hmm.
And I'm basically killing the cash account and then just combining it. So if we can kind of figure out I can stomach whatever risk I want, but all that cash is going to be inflowing, and then I can probably participate in this if we execute it properly. Small return, but that's the point of it. It's supposed to be like a cash proxy, for whatever, situation that might arise or opportunities that might arise. So, yeah, that's pretty interesting. I want to know them more details on how to best execute this.
And I'll get more into it because when I've been following it because when I first started following this, it was maybe like a week and a half ago, and Monster was above 53 a share, and the tender was further away. So it was a much less compelling risk reward, especially on a time basis. And as we get closer and closer to closing it, it's like, oh, this is actually really interesting. Because like now there's zero risk. If you get it, the minimum you do is make 30 cents a share. And you can make up to $1 a share in like a week.
Yeah, annualized. That's really good. It's not going to be anything like, people aren't going to go, oh my god, but annualized, it matters, and everything should be kind of viewed in that way.
It'll expire 11/59, June 5th, and I don't know how long it'll take to. I'm assuming it'll execute pretty quickly. So they're saying last day to tender is June 5th. I'm assuming that settles pretty quickly.
Yeah.
So yeah, just find out. Maybe I just email their investor relations and get a little more information on it, just to see like how does it get executed? When will you actually get the money for the shares? And that way you can better weigh the return on it. Yeah,
exactly. All right, the last bit of discussion that we're going to be having today is regarding heavily shorted companies.
Mm-hmm.
In particular, I mean, one of them that we can discuss. I mean, there's plenty of ones that we can talk about. A lot of them retail really likes. I'm not going to talk about SoFi because I don't want to talk about that bank. But we have one that you like. You love them, don't you?
Heavily shorted name that I love.
You hate them, but not hate. Hate's a strong word, but you think that they're dead.
Yes, I do. And actually, it's really funny because the whole retail thesis is like a short squeeze, and they're freaking out because it's less shorted than they thought it was.
Oh, B. Riley?
Yeah.
I'm going to say it to everyone, B. Riley.
Yeah.
So I'm going to talk about this one because I can't be, you can't squeeze me. So have fun.
There's a Reddit dedicated just to the stock.
The people in this are clowns, but yes, all the longs that I've seen, they're clowns. I think this is going to be part of I'm going to separate this part, and make it its own video. But okay, let's talk about B. Riley. Mm-hmm. So B. Riley, boutique investment bank, sorry.
Yeah.
And a conglomerate of, pardon my French, shitcos.
It really is. If you want shitco exposure.
I just want a shitco portfolio because there's some guy that this guy, I won't be mean. There's a gentleman who tweeted at you and said that the value of these shitcos are like, what do you say, 3 billion?
300% undervalued.
Oh, 300% undervalued. I know there was a 3 involved. 300% undervalued. I don't know where he got that from. But anyways, a lot of the retail investors who are talking about this stock, they do not understand. And I tweeted about this. I'll share my tweet. You can read it if you want more details or whatever. But let me go to my profile and I'll find my tweet. I actually put it as my pinned tweet right now because I think that's how confident I am. And Andrew here has done a lot of legwork researching this along with bacon memes in the club. And yes, this is essentially, for whatever reason, this is in a response to someone. Because I'm just going to share the person's tweet. Don't be mean to this person. You think a company with a solid reputation such as Markham wouldn't put themselves at risk by releasing or stating anything that other than what they truthfully found? Shorts are in deep, no way around it. This is one of the people that he's saying, oh, a short squeeze, blah, 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 blah. And he's like, original 10K short thesis was debunked. A large portion of shorts who bought into the original short thesis are underwater. So basically, in essence, like the argument is they filed a 10K. That now proves that they're not committing fraud. Proves it.
Well, the auditor signed off.
The auditor signed off. Not committing fraud. Definitely no fraud here. So this part, I put the image here and they couldn't, I guess they can't read. So reading is like when we say as a joke, but it's also true. This is your competition. Capital Mindset community. This is your competition. People who do not read. This is your edge. Your edge is reading. When someone asks, what is your edge? I can read.
I saw a meme. I can't remember who posted it. It's the one, it's like an old style. It's like the guy standing up in a crowd and yelling something. I don't know if you know the meme I'm talking about. Hold on, let me see if I can find it. But it was really, but the thing was, I do believe that just reading public filings will give you an edge, because like no one does it. Let me see.
Steve C, yes, reading is hard. People can't read. So, well, Andrew's pulling that up. What you see in front of you, you can go to the tweet, by the way, and just like also read it for yourself. But
this meme, and he's like, it's just like reading public filings does give you an edge. Let's stop that. You can go back to yours.
No, because I mean, yeah, I don't know why they didn't read this. But if you can pause here and you can read this yourself, but essentially the auditors found a lot of things that they didn't like. So when you get a comment like that, I don't know what to say or respond. So there's a lot of could. This is his response. There's a lot of coulds in this adverse opinion. Could is not definitive.
And the other thing too is like, this kind of goes to my you know how like you talk about China stocks and companies, and you say, because a lot of people, they argue, oh, this is fraud, all this. You're like, okay, take all that and let's put that to the side.
Yep, put it to the side.
Still, no reason to invest. B. Riley, take all the fraud accusations, push it to the side. It's a shitco conglomerate. They are burning money. They don't have other ways to pull liquidity. They have tons of debt. Like, take that and put it to the side. They're screwed. They got over $2 billion in debt, and they sold 50 million of their public stocks that they own. So now they only have 100 million left because they had 150 million in the last quarter, and they still lost in terms of cash quarter over quarter 40 million. So you're telling me 90 million of operating cash that they lost, and they're issuing a $15 million dividend.
Yep.
So you're saying like 100 million in cash that you're just like losing from operations quarter over quarter. And like, they have different things that they can pull on. They will have different levers to pull on for a while. But I'm short this company. I'll say that.
So am I. I also wanted to share an origin story of how you and I, we both, first started talking.
Yes.
And I tweeted about this. There's no video, and I am now more confident because I know that the guy was found guilty of fraud. So we'll talk about it here. I did tweet it. So first I'll start with this. Fat Brands. So many of you guys don't know, like, a lot of the stuff that happens off camera, right? But Andrew and I, this was something I talked about within Capital Mindset Club a long time ago. I never talked about it publicly. There wasn't any way to make money off of this. I made $0.00 off of knowing that this was a fraud. Because there wasn't a way. I mean, I looked at shorting it. You couldn't really get your shares. I looked at, options, not enough liquidity. So I just sat by and watched and knew that this was the fraud. So he's already ex-Fat Brand CEO, faces federal charges for $47 million scheme. I'll connect the dots. There's a reason why we're talking about this right after talking about B. Riley. So I put you saying that, but this is a screenshot showing basically, even on Seeking Alpha, I was very vocal about this company being a fraud. And talking about it a little bit, I have a video that I may end up releasing. It's kind of weird to watch because like a lot younger version of me talking about this company. And it's like when Austin, so it's back when me and Austin did videos together. And you have Austin asking me like the questions. He's guiding us through, like, we have all the things highlighted and everything, but we never ended up publishing the video because the guy was very litigious. So just in case, out of an abundance of caution, we never published it. But I did talk about it publicly, at least within the clubs, various social media accounts, etc. So yeah, basically you had Fog Cutter Capital that was used as a shell organization. This is also, by the way, showing like I had my past self saved all of
I just want to say, like, the biggest difference between these two, in my opinion, is that Fat Brands had better companies.
What for what?
Like that they were like,
oh yeah, it's that bad.
yeah, but go ahead, keep talking. I'm just saying, like, at least Fat Brands had some names that you know, and like they actually make money, I think.
Yes, I mean, and they did something interesting to what another. Well, they collateralized their royalties to get loans, but essentially, without getting too detailed with the fraud that was being committed, it looked on the surface when you looked at this back in time. If you were watching this back then, one thing that you would have noticed is, and oh, by the way, I'll show you a comedic petty comment I made to someone. The thing that you could find interesting was the company was not profitable whatsoever and was borrowing money and then paying a dividend, of which the CEO, who was now being charged with fraud, was owning the majority of the shares. I think he owned like 70+% of the shares. And he also used debt borrowed on Fat Brand's balance sheet, grabbed that money, bought up his own entity called Fog Cutter Capital. By the way, this CEO was already in trouble in the past, which actually brings about this other very comedic comment that I'll go ahead and share. So I'm very petty. I'm one of the people that will probably, if we get into like some online tussle, I'll just like leave for like 3 or 4 years and I'll come back after that out of nowhere. Nothing against this person, but it's kind of just funny. But I believe the CEO had some issues early. Oh, I think you need the context. This is the context. So I know he was indicted once for a violation rules. What do you mean? Bunch of scandals and stuff. He's responding to me, obviously. And then it said, Google the CEO's name followed by fraud. You should get to find everything. Because I'm basically saying it's very easy to find this stuff. Like there's no excuse why you don't know this if you're investing in the company. I would assume that if you're investing in the company, you've done decent due diligence in it. But whatever. So you can pause here and just read the whole comment. I won't get into exactly everything, but I go over like the Fog Cutter Capital issue. And then, this comment. So I believe the CEO had some issues early, but he has certainly become a more transparent throughout his life. And personally, I trust him. Obviously, everyone has their own opinion of trust. I've seen the Undercover Boss episode, really good due diligence using a fake reality TV show episode where Fat Burger, as most people have. I've also listened and personally asked questions on conference calls. He seems to be 100% upfront and honest. Okay, that was in September 1st, 2021. Keep in mind the date. Okay, now, and that was recently, whenever I published actually this tweet, I asked him years later, do you still trust him? I did get a response, but I won't show the response. Basically, the response was somewhere along the lines of, it was a small position for him. It's like, okay, whatever. I don't know if that's true or not. But yeah, it's kind of just like, that's more for comedic relief. And then the other comment, I don't know why Seeing Alpha just does this with the organization, but yeah, he used Fat Brands to buy out Fog Cutter Capital. I'm basically re-explaining what I told the other guy. So I won't get into that. But long story short, why is this related whatsoever to B. Riley? You're seeing a lot of similar things that rhyme. It's not exactly the same case, but things that do rhyme. And you have the same kind of almost clueless retail investors who have not done any due diligence whatsoever with respect to like understanding what an audit is, what is an audit opinion, believing that having a filing of a 10K is somehow evidence that you didn't do anything wrong. I mean, Fat Brands had one. What's the part that proves that it's a fraud or not? But when you learn about what an audit is, it's not something to catch fraud. And the main issue that people have with the a balance sheet of with B. Riley is their internal controls for valuation, which we don't know how they're valuing their businesses. They have and I can go back to my tweet. Where did I put this? Because this was beautiful. Like, I love this. So the guy who I was talking to, and let me share my screen. This is a Seeking Alpha article, right? So imagine you're getting into a debate with someone on FinTwit, and you're like, haha, you're wrong. Got you. Here's my source. Blah, Seeking Alpha. Wow. Seeking Alpha, let me just tell everyone, anyone can write on it. Anyone can write.
A forum.
Yes. Look, so I click on this. I read this article, and it doesn't take me more than 5 minutes to know this guy doesn't know what he's talking about. But okay, let's read it together. Instead of just telling you.
Can't see your Seeking Alpha screen.
Oh, sorry. Let's read it together because I don't want you to just take my word for it. Let's kind of see together why already we can find 1.61 billion in ample liquidity, dividend declared, and short squeeze. From the title, we won't get too picky, but dividend, not a good reason. Short squeeze. Okay, so we're getting into like some sort of
what is this?
Don't worry, it gets better. So the company declared 50%. This is the summary. Rally faces just, there's a missing T there, but being really nitpicky with that. 25 million in debt maturing in 2024 as of end of his first quarter, with 146 million in debt maturing in 2025, comfortably covered by cash. All right, cool, whatever.
Wait,
all right,
can you back up before you go forward?
Yeah,
and maybe this is where you're going to get to. When was this written, and where are they getting the investment balance? Did they go through that?
This was written May 18th, 2024.
Okay. So go ahead.
Okay. No, this is where it gets really good. Like, this is the meat and potatoes. This is how you know the guy does not know at all what he's talking about. By the way, I saw, not going to say the names, but I saw one that was hilarious, right? And there was a guy on YouTube who did an interview recently for a company, another Seeking Alpha, and the guy charges $500 a year for his research. It's so bad. If you guys really want me to, I will talk about it. It will be some trash talking a little bit, but like, it's really bad in the sense that guy charges $500 a year for his research, and the level of analysis is
do I think I know? Is this who I think it is?
I think you know who it is because I mentioned it, because I was like, how is this person charging $500 a year for their research? And it's like really bad. I saw their evaluation on a particular fintech. It was really bad. I was just like, and I broached the topic with some club members who are also interested in that same stock. And I said, what's your valuation on this? And it was nowhere near. They're invested in it too. But like, the guy is like, and the problem with it is like, no, the guy in particular who did the analysis is not a YouTuber, but he was interviewed by a YouTuber who was apparently also invested in the stock. So the guy claims to be like a former equity analyst. And so that's why I'm like, when I saw the evaluation, I was like, no, there's no way, you're lying. And so now you're bordering fraud because you're lying about your former employment. And so, you're using that as like a crutch to kind of get people to pay you $500 a year for a subpar investment product. If that's anything indicative of the analysis. But anyways, I'm not talking about that. Well, let's talk about this guy, this gentleman right here, who wrote a very beautiful article, most beautiful article ever.
To be fair, I think Jeremy charges $100 a month.
Oh yeah, cheap for compared to that guy. That guy is a little, All right, but anyways, so we have highlights. Ooh, every time you get the highlight pen, get really excited. Highlights. Ooh, you know what? I'll get my highlighter too. We'll both have highlighters.
Oh,
and I'll use red because red is bad.
Yeah, what tool is that? That's really cool.
It's an extension, like a marker extension for page marker.
Cool.
I highly recommend it for people who'd like to do. You're probably gonna love this.
Yeah, that seems really cool.
All right, so
I put it into Adobe and then do it there. But
go ahead. Wait, let me delete that and let me lower the size a little bit. We need to be as small as possible. What does that word say right there?
Fair value.
As an accountant, Andrew, what does that phrase mean right there?
Fair value?
Yeah.
Bullshit.
Oh, okay. So if I'm gonna rely on, and I got a little highlights.
This is what I'll say. Fair value means subjective.
Subjective. So I'm gonna say, oh, hey, I got $949 million. Oh, fair value. Oh, so there's presumably an evaluation methodology that was done internally, which we don't know what it is. We have no idea. But Andrew, I have done the evaluation. Oh, for some reason I have both my watch, another watch here, but I have done the evaluation on this watch, which funny enough is now disappearing because of the color in the green screen. And I have determined that the fair value of this watch is $8,000.
Have you now?
What would you ask me?
How did you determine that it's worth $8,000?
And what if I told you, I said, well, I came up with certain, this is my exact answer to you. I came up with certain assumptions, and based off of those assumptions, I believe this to be valued at $8,000. You, as my auditor, would say, I mean, okay, maybe you express a problem, but I'm trying to do apples to apples comparison, because we're basically saying that was the case. I said it's worth $8,000. I told you some vague answer. You might have a problem with my answer. You express that problem somewhere else, but you let me write it here on my balance sheet that I have this asset, $8,000, and then some guy out there goes, oh, $949 million or $8,000. It's like, yep, good enough for me.
Well, how about this? How about if I'm your auditor and I said, I'm giving you an adverse opinion, and one of the things I don't like is we can't determine how you value your investments.
Exactly. But yeah,
that's
my
what
exact
happened.
answer to you is like, well, I came up my precise words to you about how you asked me, well, how did you come up with that valuation for that watch? I used various levels of assumptions and used a discount rate, and I came up with $8,000. That's my exact answer. I don't tell you anything else. Of course, you'd have a problem with it.
You know, I've gone down the rabbit hole with this company.
Yes.
The interesting thing is 2022's audited financials. There's a note, and this is very common on these fair value assumptions, because what happens is you're my auditor, and you say, hey, we're going to test them. So we're going to get a third party and test them, usually for reasonableness, which means basically they come in and say, you know, maybe I don't value it like that, but I can see it. It makes sense. Fine. We're cool with it.
Mm-hmm.
So 2022, the note says Markham, the auditor, brought in their own third party, and that's how the value assessment was done. 2023, it says B. Riley used their own internal people to determine the fair value, and that's how the assessment was done. And so basically what happened was Markham said, we're not comfortable with this. And B. Riley said, that's fine. But here's the thing, though. Going back to you're kind of saying, I'm not saying you're saying fraud. You're kind of saying BS. We don't even need to go that far.
We don't need to go that far. You're right.
So can I show you something? Because I have it up here. So if we go to the B. Riley, because this is off the 10Q. So if we go here, so this is the breakdown of their assets measured at fair value, right?
Mm-hmm.
So they have the loan receivable and the securities, which, by the way, 862. They have. We're not going to get into that whole thing. Here's level one. Level one means it's publicly listed, right?
Yep.
So, fortunately, they have to file a 13F, so we can see that. So here we see, okay, they have 126 million level one publicly traded investments. Let's go to Form 13F. Total value, 105 million.
It's lost value.
Wait a minute. And by the way, shout out to Friendly Bear on Twitter, because I think he was the first one that pointed this out. And in their investor price, by the way, they have another number that doesn't tie to either of these. So, which is 196 million. So we don't have to go that far to say like their fair. Yeah. So here's like total value, 105 million. 10Q, you need a fair value, level one, 126 million. I don't know if corporate bonds technically go on there or not. I didn't include this. You don't need to. You can just look at equities, but they do have warrants, note. So they have a note here. So they have notes listed in here as well. So I would think some of that corporate bonds is also included in that 10Q. I'm not sure though. Does that normally get included? in your 13F filings? Because like here's a note that they have in live person for 200,000.
I believe so. Yeah, because anything that's public, it's publicly held and publicly tradable.
By the way, portfolio shitcos. There's like 2 good companies in here. Like Hyperion is a materials company that's done really well, and Double Down seems like decent.
Double Down, just Double Down. Okay.
Yeah, it's an online casino. So, and like I said, I don't know if it lists it here. It doesn't. But if you look, and this is what I was telling people, so see a value of 105 million. I actually went back and did the math. They sold about 48 million. So they got cash. So the last 13F, and this is what I'm saying, like they're having to pull from different things. If we go, assuming this is it right here, last 13F.
Zoom in again.
Yeah, last 13F, 156 million.
It just gets better and better and better every single time. It appears, I'm going to be careful with my language. It appears as though you have a management team that is just liquidating by doing a high dividend without actually generating real profits. And that's always a red flag. Because it's a material amount of money, by the way. It's a material amount of money for them. It's a good amount of money. If you own 20% of a company, you have a 70% dividend yield, make that last as long as you can. Get as much of it out.
Let me see.
All the risk is on the balance sheet of the co, which is a separate entity from yourself.
Yeah, so on their own, so like we can talk about this as like people keep on saying fraud. I don't think you need to go there. Like, do I think there could maybe, but like doesn't matter. Go off their own numbers.
Zoom in again real quick.
Yeah. Now remember, this company has 80 million of interest, I think, a quarter. And they have 67,000 in adjusted EBITDA, which takes out, so actually, no, they should have interest expense of 44 million. I'm sorry, not 8 million, 44 million. And that is money that you have to pay. Like, that is something, you know, for some companies, I'm like, okay, it's fine, take it out. Like, it's, so you back out all these things like SBC or backing out. Let me go a little bit so I can see. Depreciation, amortization, because yeah, CapEx isn't a real thing. Restructuring charges, because that's not, you know, you have 67,000, you're issuing a $15 million dividend. Like, hello. And part of it's a benefit from income taxes because you're losing money. And then they do this operating thing, which basically says we're not going to count like unrealized or realized losses from investments, which is really funny because you're liquidating those to turn to cash very quickly. So, but anyways, I could go down this rabbit hole for hours. You've seen me go down it for hours. I think this company will kick the can at some point. But I think there's other companies that they will be sacrificial lambs before they get there. Yes. And so I am more looking down and going that rabbit hole. And that's where I'm currently short.
Yep.
And if you want to know what that is, you got to join the club. Sorry.
I'm bad at advertising. But yes, that would be the case. We did get a question that I thought was a good way to shamelessly plug, I guess. But yeah, what's included with being a club member? I rarely hear you advertise it. Yeah, because I'm bad at that. But unlike all the other grifting scumbags on YouTube, love the show. Thank you.
Did I just become a grifting scumbag?
Yeah, you did. So what's included is you get, depending on like holidays, etc., but most of the time you get 2 private live streams. One of them is just me kind of soloing, and the other is myself with the other analysts. You also get investment write-ups. You also get my portfolio updates. You also get the analyst pitches, etc. But the write-ups are sort of like the club itself. I'd argue that there's probably, if you really wanted to explore it, there's an ungodly amount of video content hours, because pretty much every voice chat is recorded by one of our other club members, who basically records everything, puts it into a format, and then just uploads it for the community. Because it really is that, at the end of the day, it's a club. And the point is that not just like to develop a monolithic viewpoint of like, oh, I'm right, I'm the figurehead that comes on and talks publicly on YouTube, but you'll see pretty quickly that there's a lot of very intelligent investors who all come up with their own ideas. They post about their ideas, and the point is to be a collaborative effort to try to find new ways to make money via investments. So yeah, that's pretty much what you get as far as the totality. I'm working on new tools to kind of provide new reports. I'm still not done with it yet, but once I'm done with it, which should be, I'm going to give myself 1 more month to work on it. But basically, when I do write-ups and pitches, it would be like a supplemental PDF file that basically comes with it. And yes, we did recently also kind of add that, or this newer feature, like a searchable feature for a lot of the private streams, where basically we do like the pitches and we separate them into their own little sections, and then people can go in there and search by ticker. That's done in an effort for newer members who come on to kind of say, you know, I'm new, I don't even know like what's even being talked about. There's also like this literal what do we want to call it, chat room. Only I can type in there, but it's like the current main ideas. And then what the idea is, the idea, pun intended, you can go in there and you should be able to search the tickers in the different either the investment write-ups or the video portion, the pitches section, and then you can basically get what the pitch is for that idea. And then those change. I change them, I think, about 2 to 3 times a month, that list of current ideas, because ideas come and go. Some, you know, like they play out, and in some cases they fail. And it's not just like my ideas. The point is, like, I look for either Andrew likes an idea, I throw it on there. Leo likes an idea, I throw that on there. I look around, I might not be invested in it, but I say like, oh, so and so has a pretty good idea, that they well thought out, etc. Boom, it goes on there. And so it's not just supposed to be like, oh, these are only my ideas. You get to feel that or know that by my portfolio updates. You get to see like where the real money portfolio is. And it's like, it's not for the holding company, which is basically what you get to see in the capital mindset, which is now no longer, I would say, it is very meaningful sum of capital. And you see like the full brokerage screenshots. And I'm trying to be cautious about like the options section, because even though I tell people like it's supposed to, for you to know like how I'm positioned, not necessarily to copy. People are going to do it anyways. But yeah, it's supposed to be for you to at least know where I'm coming from when I'm talking about something. Because I could like something, but I may not own it. And then you might say, but you know, you're not very confident in it. Not confident enough to own it. So that's basically it. You get the copy from in real time. No.
I like this question here. You have Gondor address why he hates B. Riley, because it's Gondor's shit goes at KKR is his biggest position.
Big burn on Andrew. Big burn. KKR is not.
My argument would be, actually, if you want to look at private equity that way, I'm happy with that. Like we can say that. The difference is KKR has and can they have marked up their portfolio. So they're saying their non-liquid private held portfolio is up, which if you don't want to believe like PE on that, that's fine. B. Riley has privately held investments that they're having to mark down because they're so bad. Like their private investments are so bad. Like they bought that Badcock company.
Excuse me?
For 570. Badcock Furniture. They bought them for 575 million, and 2 years later sold it for 75 million. Like like at least what even is, let's see. I want to see what their 13F how have these guys done. Well, they've done pretty, like KKR's biggest holding in their 13F is Bridge Biopharma, which is up over 100% last year. Oof.
Yeah, I think that's a harsh conclusion on KKR. KKR is not.
He's teasing. He's teasing.
I know. Yeah. But yeah,
they
oh.
Do you want to call it only because like I do want to do some private stuff, and I think I have a time limit.
Yes, we're gonna head off. So thank you guys so much for watching, and if you guys enjoyed, if you're not subscribed, if you're newer, follow me on Twitter, subscribe on YouTube, Twitch, wherever you like to see me. Let me know you liked it by retweeting, liking it, interacting with it. Comment down below, and if you're interested in joining the club, you can see the link in the description below. With that being said, we'll be seeing you guys on the next one. And for all club members, I'm going to be sending out the link here very shortly for you guys to hop onto that. All right.
Okay. We'll do it live. Okay. We'll do it live. F it. Do it live. I'll write it and we'll do it live. F***ing thing sucks.